When it comes to Capital First, it's a completely different picture. Growth is robust, retail activity is strong, and the franchise continues to muscle strength in a very competitive environment. V. Vaidyanathan, Executive Chairman, Capital First, joins us. Strong set of numbers, Mr. Vaidyanathan. What are the key drivers of a 50% NII growth and PAT growth, and also that impressive 32% AUM growth?
Well, basically because the AUM has grown from 20,000 crores to 25,000 crores in 9 months. That has directly translated to the NII, which has actually grown quite strongly. The total income from both NII and fees has actually grown from 427 crores in the same quarter last year to 639 crores in the same quarter this year. So that has straight away translated to the bottom line, and then you see the increase in profits by about 49%.
Right. Now, given that the merger of IDBI Bank has been announced, how should we look at Capital First basics ratios? Do you think next 2-3 quarters there could be a transition cost and we should ignore that, or you would be able to hit the ground running?
First of all, the merger process itself could take anywhere between 6 to 9 months, I would say, because there are a number of regulatory approvals to be taken along the way. And in the interim, really it's business as usual. We have a really good business model. We have good access to the good customers. We have good systems for recovery and so on. So basically for us, it's just business as usual. We feel that to continue to grow at about 30% this year should be our main focus. The merger will happen and the ratios will show up at that point of time. It's too early to comment upon that.
Okay, but I think one issue, Ms. Vaidyanathan, that the market would have is on, what the asset quality picture would look like for the combined entity with IDFC Bank, having slightly higher stress on their books. Could you allude a bit to that, qualify what the total outlook would be thereof?
See, again, in our case, for example, we find that the NPA has been continuously been stable or trending downwards for 8 quarters in a row, except during demonetization phase when it went up by about 25 basis points. If you take a year-on-year story for Capital First, the gross NPA has come down by about 5 basis points, and the net NPA is flat. If you take a sequential quarter, the net NPA is down by 3 basis points. So as far as we are concerned, what we are carrying into that story is a very stable asset book, and we absolutely see no reason whatsoever for the asset story to get disturbed for Capital First. We also feel that the story of demonetization is over, GST is broadly settled, so there is no new clouds on the horizon that we should worry about.
Okay. Heartening to hear that. Your asset quality at 90 days per due has remained fairly stable quarter on quarter. What is the outlook on this?
Like I said, there is, we believe our underwriting standards are really very good, and our credit process have been honed and re-honed and worked and reworked continuously over the last many years. It's been tried and tested on a large base of 25,000 crores now. So we feel quite confident that this will stay this way in the years to come. The other significant feature for Capital First is that the wholesale book is really quite small. It's just 7%. So no longer we ever bother that it could move the needle. The big story is retail, and retail is very, very stable.
Vaidya, hi, morning. I was just going to come to that. Tell me how the retail book has shaped up, and what's the view on disbursements going forward?
Well, as you see, the loan book for this year is growing at close to, say, 30%. We had guided for about 23 to 25% at the beginning of the year. We feel that actually growth is coming back quite strong, not just in our loan book, but also when we see the results of various companies that you profile on your shows, at least the Marutis and the two-wheeler companies and the FMCG, we saw the Unilever numbers up 11%. So the way we see it is that all around I think consumption is coming back quite strong, irrespective of which sector we are talking about. I think the only bad results we saw was probably the telecom sector because of their own woes and so on. But those probably an exception. So I'd say that since the consumption is back and many of our businesses are based on consumption, I think it augurs pretty good for growth. Now, if you would ask us to guide for the next year, probably we'll still guide about 25%, which is we feel more comfortable saying to our investors and the public. But this year has been a bit better than that.
But where do you see your spreads and margins heading? And the reason that I ask is because there is high competition within the retail lending space, and there is the other factor, which is the rising bond yields as well.
Indeed, that's actually a very good question. Really, a large number of players have entered the consumption market, and let me say the retail market over the last 4 or 5 years. You could see that even state-owned banks are getting more active in the market. You could see the news from the ministry yesterday asking banks to move in that direction. Private sector banks have always been doing very well here. NBFCs are all focusing here. So I think in that sense, yes, there is a lot of competition here. But also we should not forget that the market is absolutely large, and we should really focus on how large the market is and how much we can grow. And actually, in my mind, actually, if more players come to the sector, it's actually good because it makes this a much more vibrant and a larger play rather than being one of the few players in the market. That's never very comforting.
You know, interest rates have been on a decline. Not only they've helped your cost of borrowing, they've also helped the borrower because the EMI has come down. But in next 12 months, 18 months, if interest rates they start growing higher, can borrowers feel the pinch of higher EMI? Could that lead to NPA, or we are nowhere close to that cycle?
My sense is that we're just absolutely nowhere close to that cycle, because if you remember the structural shifts over the last 4 years, from 2014 to now, at least things are down by at least 1.5%. Home loans were about 10% 4 years ago. It's now 8.5%. It has definitely eased people's EMIs, and maybe it has made them afford more. So the defaults really are not coming from an interest rate increase, or defaults are not reducing because interest rates coming down. It's one of the one of the variables, I guess, but not a significant one. The defaults, if any, always come from a larger play in the economy, of job losses, or if Indian economy is not growing at 7.5, now begin to grow at 4% or stuff like that. Those are the kind of macro factors that affect these things, not heat. And as far as the Indian economy is concerned, frankly, you see the global stories, you see what the Prime Minister is talking at Davos, we see it all around us. I think things are looking quite good. You can see from the results in the chatter you do with your companies that come on your show. It's absolutely good. I really see no reason for problems. Actually, we are not seeing any trouble, like I said earlier.
My next question would be on loan against property. Now, real estate market per se is not in a great position. The housing disbursement number, we can be selectively bullish, and I can give you data which says that some companies are feeling the impact of base and the tightness in the real estate market. What is your outlook on your LAP book?
Definitely, with the property prices stabilizing over the last 3 years, in fact, in some markets like or maybe Delhi or a few other locations, actually property prices coming down by about 20% odd. The loan against property market is not really you shouldn't really bet on it to be the backbone growth for any company. It's a good business. It probably grows by about 10 to 12% per year, but we shouldn't power it too much ahead because property prices are there where they are. But the important thing, as all companies will tell you, that the lending on the loan against property is largely backed by cash flows. We don't see a delinquency issue there. I think the big growth area, actually, which we feel really bullish about, is actually the affordable housing segment. That's really coming along. You may have seen data about how housing sector is, the housing sales are not improving, but that's largely in the large ticket items. We're also beginning to see some early stages of improvement, but you talk to any developer doing projects in the low ticket housing, their products are going out like a flash. So that's a big growth area, and we are really focusing on that.
And we wish you the very best, Mr. Vaidyanathan, with regards to all the plans that you may have on the anvil, primary among which is this merger with IDFC Bank. Thanks very much for joining us today.